Hello, everyone, and welcome to another Roofing Economic Outlook from Roofers Coffee Shop, sponsored by Angi. We are so proud to bring this economic outlook with Mischa Fisher, Chief Economist for Angi, to you every month. Let's just get to it. I mean, we've seen the last two consecutive quarters, a contraction in GDP, but the labor market is still strong. So what do you see happening with all that?
I see an economic debate, which is what we're having.
Yeah.
And there's two things that are going on. The first is that everybody feels kind of a slowdown. Things were going crazy during COVID, booming. We weren't expecting that, particularly in our industry. And now it's slowing down. People kind of feel it. There's some unease. And sure enough, in the GDP numbers, we've seen 2 quarters of contraction, which is colloquially speaking, what people typically think of as a recession.
Right.
But it's also true that the National Bureau of Economic Research, which is a non-governmental entity based out of Massachusetts, that they've never entirely used that as their definition. So there's sort of the on-the-street definition of a recession, which is 2 quarters of negative growth. And then there's their definition, which is sort of what they say is a prolonged contraction across multiple sectors. I'm simplifying it, but it's a little bit beyond just 2 quarters of negative economic growth.
Yeah.
And I kind of anticipated that this was going to be a debate if we did have this negative contraction, because then, of course, we're going to have a debate about whether or not we're in a recession. And that's the debate that's happening now. The bearish case is the economy has a lot of debt in it. Prices have shot up. We've got a war in Europe. We've had inflation, which doesn't make anybody feel good. That's going to hurt consumers. And that this is going to trigger a pullback, which will hit the labor markets. And then you get a runaway effect and you have a recession. So that's the bear case. The bull case is household balances are good. The labor markets are holding up. People still have their jobs. It's still a tight labor market. People are still getting raises. Yes, everybody's a little bit poor because of inflation. But on the other hand, employers found it so hard to hire people, they don't want to just go run around shedding jobs willy-nilly. And I think it's sort of a wait and see what happens with the labor markets. The Fed is making credit much more expensive. This means consumer spending is more expensive, and it means that business expansion is more expensive. That will slow things down by design. And they're going to keep making credit more expensive until things slow down. And they've kind of been signaling that we're looking at almost another percentage point increase in the lending rates that they set. And so you're going to see that trickle down into the rest of the debt markets. And you can expect to be looking at maybe mortgages probably in the 6%, which is pretty painful because they were below 3% less than a year ago. So that's kind of what's happening. We just need to take a wait and see approach and see what happens with it. I am a little bit more optimistic about our sector because of this home equity piece. There's so much out there that I think that is a good thing for people to tap into.
And I want to follow up on what you just said about the Fed, because I think there's a lot of us that are probably a little confused by this, in that the raising of the rates did its job. Now stop. What will it take to get the Fed to kind of pull back on raising rates and even start lowering?
You're talking about some really deep things.
Okay.
And I'm going to preface my answer like a true economist with kind of a pedantic point. And that is that when you're making opinions about what will happen or what should be done, you typically try and rely on something empirical. Ideally, we're not just making things up based on what feels good. Ideally, we say, hey, based on this, we have X amount of evidence that this other thing works. We're not really in that situation right now because these things don't happen very often. We kind of have a sample size of 1. So we can kind of just look back to the late 70s, early 80s, and they did eventually get inflation under control, but mortgages hit almost 20%. They slammed the brakes on the economy and created a recession. It really put spending to a halt, and that meant that inflation came down. And there's a concern that if they try and engineer the soft landing, they're not going to quite shock the economy enough to bring back the spending piece. And as a result, you're going to have higher rates, but it wasn't enough of a shock to actually stop the inflation. So the question is, how much of a shock do you have to put into the system to stop the inflation? And, they could definitely stop the inflation if they set rates at 20% tomorrow, but that would definitely cause a deep and severe recession. So the question is, can they raise them just enough to stop the inflation without actually triggering any sort of actual economic crash?
The Inflation Reduction Act was recently signed into law. How hopeful can we be about this actually impacting the inflation rates, especially after what you just said about the Fed?
I think that even the supporters of the bill would acknowledge that it's not really about inflation. I think that everybody kind of recognizes that was the branding to get it through Congress. Mostly that's about, new tax incentives and other things for making, a lot of residential investments around, say, energy efficiency and solar panels and that sort of thing. And I think this is backed up by some of the other estimates. Wouldn't expect that to do much for inflation. Inflation is really going to be about the cost of credit and whether or not the concern about a recession causes people to pull back their spending enough that inflation comes down. Now, that act has some other things going on in it that could be good for listeners. If you're in the solar panel business, I suspect this is probably pretty good for you. If you're in the phone business, I think these things will be beneficial because consumers get to keep a little bit more of the cash in their pocket to go out and spend on those things. But I don't necessarily think there's a strong tie into inflation. And I think that that's not a very controversial point. I think even the supporters of the bill would acknowledge that it was not necessarily an inflation bill.
It was a little bit of marketing, maybe.
I'd say it was very heavily on the marketing.
Yeah. Okay. But part of that bill increases availability of lands for extraction of fossil fuels. So let's talk about a little bit of what's going on with gas prices. We have seen the fuel prices decline over the past month. Do you see that as one area where inflation actually starting to come down in the US? I know not in the internationally, but in the US, and kind of what are some of your predictions there?
I think they all tend to move together because petroleum is traded on a global market. So the prices do tend to move together most of the time. And they didn't have much more room to go up here. Like it was sort of at the peak of what Americans are really willing to spend on it. I just got back from Europe where I was spending, probably close to $8 a gallon on the gasoline there. And, that's not something that we're willing to stomach here. And, for the sake of my pocketbook, I'm pretty glad about that. I'm glad that that's only something that it requires a cost on vacation, not a regular day-to-day cost. I think that in terms of more drilling, when prices go up, that's ideally what people do. But these things aren't instantaneous. You need long-term capital investments to actually expand the productive capacity. And you have to actually look at new wells that are being tapped and new lands that are being permitted. And it's a whole process, not just sort of one limited thing. And there's usually a long lead time. For better or for worse, some of the reduction in gas prices is because of the slowdown in economic activity. That means that it's not this great thing that gas prices are down by themselves. It means, hey, there's less demand for sectors of the economy that are using gasoline. Air travel in Southeast Asia is down. That's going to drive down the demand for gasoline globally. Collectively, all of those things, I think, are something to watch. I don't think we're going back to the, $2 a gallon gasoline that we had during the pandemic. But, I think if we see the next year with gasoline prices in the threes, that's probably pretty reasonable.
So I've been speaking to some of our manufacturers out there, and we are hearing about a slowdown in new construction. What are you hearing, and what could the ripple effect be on, do you think, especially in roofing and construction overall?
I think if your business is heavily indexed towards new construction, you should make sure you've got some remodel business or some replace business in there, because that is less interest rate sensitive. New construction is very sensitive to interest rates because builders want to sell those homes, right? They want to get them off their balance sheets. That means you need a consumer who's out there getting a mortgage that they can afford. When interest rates go up, consumer can't get a mortgage that they can afford, and builder doesn't want to offload it. That's going to be a thing that you want to really make sure you're cognizant of. For existing structures, if interest rates double, it's not like the number of houses disappears or diminishes. We still have a little over 90 million single-family houses in the country. Those still need roofs replaced on a pretty regular cadence. Interest rates don't factor into that equation, right? People just need to get them replaced. So make sure your business is diversified. I think that's a good rule of thumb anyway.
Now, one of the things, speaking of new construction, not just residentially, but one of the things I heard yesterday just from the NRCA was that they are seeing an increase in permits and new construction of multifamily housing, whereas single family housing is definitely on the downturn. So are you hearing anything along that with the multifamily housing and kind of that growth?
I think it's kind of a regional story, and you got to kind of look at what local rents are doing, because local rents, people want to chase those higher rents, so they're going to build supply to satisfy that demand. And, and then in a perfect world, in a functioning market, what happens is people are chasing those super profitable rents, and everybody chases out the profit, and you end up with people renting at reasonable prices, and a lot of supply has been added. That's how a perfect functioning market works. Housing is not always a perfect functioning market, but rents are way up. And so you're going to see people chasing that and say, hey, rents are up 30% in this city over the last 2 years. Let's go build a multifamily unit and rent those out. So
right.
I think people are chasing that. The exact details of it are going to be kind of a local story.
Finally, Mischa, this affects us all. It doesn't matter if you're in roofing or not, but the market is down in 2022. What are your thoughts on the performance and trends of the stock market, and any tips on what people should be doing?
I am somebody who buys for the long term, and it's not financial advice. I'm not offering anybody financial advice. I'm not a licensed securities or financial consultant, but I personally think it is smart not to try and time the market. And the best trading days usually follow the worst ones. And it's very hard for any individual to actually time that. People can get lucky, but the track record of people being able to beat it consistently is not great. So I personally do not pay attention to the day-to-day swings of the market.
Same here. You have to do the same thing, because it's just a little depressing when it's down, when it's up. Yay! Right. So a little bit of a roller coaster.
Well, remember, you don't actually, and this is a good way for people to reprogram their expectations. If you were in the market for a hamburger right now, and I told you the price of hamburgers was up 40%, you should not be happy about that. You should be upset by it. You want the price of hamburgers to drop because you're in the market to buy them. It's kind of the same thing with equity. If you're retired and you're done buying equity and you're just in the selling phase, then yes, it is a bummer that the market is down. But for most people, they spend most of their lives buying into the market. You want it to be down in the short term because it's cheaper for you to buy. It's like saying, I need to buy all the hamburgers I need for retirement. You don't want the current price of hamburgers to go up. You want them to be cheap. You want them to, go up later so that you can sell them at a good price. But, if you're under 55 or so, and you're upset that the market is down, I don't think you're thinking through the long-term implications, because buy up, hold for the long term. You're still in the buying portion of it, and it just got cheaper for you to buy.
Exactly. Any other that we haven't covered here, Mischa, or any things that recently you've heard that our roofing companies out there should be aware of?
I mean, I think the main thing is recognize, don't get caught up in short-term media cycles. Think about the long term, think about the medium term, think about the foundations of your business. Don't be so over levered that if there is a slowdown that you're wiped out, right? I mean, protect yourself from those things, but also don't panic that, the economy has swings and cycles. It goes up, it goes down. You could argue that we're a little bit overpriced in certain things, so expect a pullback. Inflation's up and that erodes people's buying power. Expect a pullback, but the economy will be up again and home prices will be up again in the future. And, build a business and think about your profession and your career and your capacity to do things in the long term. Make sure your business is a place where if you're telling people you'll be done by 6 p.m., you're going to be done by 6 p.m., right? I mean, think through the fundamentals of how your business runs rather than getting caught up in the day-to-day news cycle.
Agreed. Mischa, as always, thank you. This has been great. Thank you, everybody, for listening to this Roofing Economic Outlook, sponsored by Angi. We will be back again. Please watch all of them. It's very interesting as we go through the year to see all the discussion and how things are moving. So we will see you next time. Thank you so much and have a great day.